Okay, hello and welcome to day one, mindset and foundation. So this class is going to be all about setting you up with the correct perception of what trading successfully really looks like. We're going to be breaking through the problems you've got right now. I'm going to be explaining where it is you're going wrong, and we're going to diagnose and fix your trading issues. This is one of the less exciting videos because we're not talking through charts and strategy and actual money-making tips. We get into that soon. But this class is incredibly important, probably the most important in the program, because even if you just take this and then you give up and you don't even finish the course, you're going to learn a lot of things in here that will set you up for success. And of course, I trust that you are going to complete the program and follow my guidance throughout. And if you are going to do that, you are going to need this information in your mind as well, okay? So just lock in through this video. This is just the first. Soon we'll be getting into the fun stuff, the charts, the trades, but this is vital. So stick to it, okay? So before you can win, you need a complete mental reset. Most traders don't actually fail for lack of technical analysis or risk terms. They fail because they don't have a system and they don't have any respect for how systemization compounds small edges into lasting success. So in this class, we're going to be setting all of that up. We'll break the mental noise, install a rules-first approach, and lay the foundations that you're going to use for every decision in your trading journey moving forward. So here's how it's going to be laid out. We're going to use around the first third of the video to break down your current trading problems, where it is you're going wrong now. And I want to get really into the deep root cause of those problems so you understand where it is up to this point that you've been going wrong. We're then going to help you to set expectations about how long it takes to win and how much money you should be looking to make from trading and how much is realistically achievable over time, these kind of things. So you understand and can kind of pull your mind back to reality to set your expectations correctly so that you can actually work towards that instead of working towards some crazy goal that is unattainable. We are then going to talk through mentality and how you actually turn your mind into the mind of a professional trader, therefore creating the results of a professional trader. We'll talk about systemization, edge, statistical advantages, all of that very important stuff, and then close it up by setting your success roadmap. So essentially this class is all about getting you into the mindset and the operations of a professional trader, okay? So we're gonna start off by going through your problems. This is going to be an uncomfortable bit of the video, but it is very important. Now, your current position is one of these three. You're either a beginner who's stepped into the markets very recently, an intermediate who's been here for a few months to a year, or experienced who's been here for many years or a couple of years, okay? Now, regardless of where you are in your trading journey, whether you're brand new or you've been around for quite a while, you are going to have a few strengths and weaknesses. Beginners have no knowledge. That's a weakness because, of course, you don't really have any information on the markets whatsoever. But there is a pro to this, and that is that you haven't picked up any bad habits. You haven't learned anything false or overly complex or conflicting, so you're free of bad habits. Intermediate traders, who I believe the majority of you will probably be, having traded for a few months to maybe 1 to 2 years, have some knowledge. You understand market dynamics. You kind of get exactly how markets work as a whole. You've got some technical systems behind you. You just haven't managed to piece everything together yet. And with this knowledge also comes bad habits, right? These are hard things to break that we need to knock down today so that you can get on the right path. And if you're an experienced trader who's been trading for, let's say, 3, 4, 5 years or more, you've got a load of knowledge. And I would actually guess you probably have all of the information that you need to win at trading. What you need at this point, if you're experienced, is simply someone to build this into implementation and show you how you implement the information you've already got. As well as, of course, the con of being experienced is that you've got a massive amount of bad habits that we need to break down. But whether you're a beginner, you're intermediate, or you're experienced, I want you to know that this program is going to work the same for everyone. And this class specifically is going to knock down all of the problems you've got. The problems that you face now or will face soon, and the fixes to these problems are all the same, regardless of your level of experience. There is nothing special about your case. We can fix every trader. Okay, so we're going to start off by going through some surface level problems. Now, these are problems that you generally would think, this is my problem with trading. You know, if I were to ask you, what is it that's going wrong in your trading? You might say something like this. I can't find a strategy that works. My win rate's too low. I don't have enough time because of my job. All my trades get manipulated. I don't have enough capital. I mess up my entries and exits, and I struggle to control my emotions. So these are the kind of things that people give as the reasons why they lose. And these are, at least feel like, very real problems, right? But there are deeper roots to the problems, and you struggle to see it because you only see the surface level. You see the kind of effect of a deeper root problem, and you think that that effect is the problem. The problems are actually bigger than you think they are, but when you truly see them, they're easy to fix. So we're going to go through each one of these now and break them down to the deeper root so you can see where these problems stem from. So if you think the reason you're losing at trading is because you can't find a strategy that works, I'm going to tell you now, it's not the strategy that's the problem, it's you. You haven't let a system work because you jump ship after a short time when losses creep in. You focus on short-term returns and disrespect the importance and effectiveness of system and edge. So if you've, up to this point, been jumping from concept to concept, from system to system, this is a big reason why you think strategies don't work. You try it for a small period of time. As soon as it starts losing, you find something else and move on to that. But you never actually develop time to, number one, build statistics around your system, and number two, build an understanding of how you need to optimally apply the system. Therefore, you're not actually trading a system long enough to make it work, all right? It's not particularly your fault, it's the way we're taught, and we're constantly pushed new shiny object. But we can reframe this, I can't find a strategy that works, to I don't know how strategy works, because it's a lack of understanding of how systems work and how to implement them successfully that makes you believe that no system works. So my win rate is too low. I'm gonna tell you, win rates mean a lot less than you think. Risk to reward, something we're gonna cover in depth in this class, is the real element behind success. You can comfortably lose 7 out of 10 trades and still make money. So if the reason that you would give as to why you're a losing trader is the fact that your win rate is too low, well, that is not the problem. The problem is more so that you don't know what makes traders win. Because if you think that win rates are deciding whether you win or lose, you're wrong, okay? So we reframe this one as I don't know what makes traders win. I don't have enough time because of my job. Now, this one, simply your outlook on what makes good trading is wrong. In most areas of life, jobs, studies, university, school, hobbies, the amount of time you put in generally equates to the results and the performance that you get out. But trading is not like this. Your time spent trading is not equal to the reward that you achieve. It doesn't equate to the reward you're going to get. Because in trading, you're paid based on the quality of your decisions, not on hours spent working. So you only need, really, and you're going to learn this throughout the program, 20 to 60 minutes per day to absolutely crush your trading goals and trade successfully, right? You can quit your job on 20 to 60 minutes per day, which means there is no excuse to have no time because anyone can find 20 to 60 minutes. You could trade on your lunch break, you could trade in the morning, you could trade in the evening. So a reframe for this problem, I don't have enough time, is simply that you don't know what good trading looks like. Therefore, you feel like you haven't got enough time because you think you need to cram more hours in the day into the markets, which is simply untrue. All my trades get manipulated. This one is a very common problem to jump through. Eventually, once you've started learning about liquidity and institutional participants, if you don't know what they are, we'll get into it. You start to lose trades and then you start blaming everything on manipulation. It happens to the majority of traders, but it's victim mentality, okay? Manipulation is drastically oversold by people pretending they have the secret strategy for success. People will try to tell you that everything's manipulated. The only way to win is to buy my program, things like that, right? But realistically, it's very overblown. Markets follow order flow. It's pretty predictable as well when you understand the dynamics of order flow, which means the manipulation that is killing you now, or should we say the manipulation, is actually something that very soon you'll find many opportunities within when you understand the order flow and the way that the market moves. We can reframe this, all my trades get manipulated, into I don't understand market dynamics because it's nothing to do with manipulation. It's not evil brokers stop hunting you all of the time. It is just your lack of understanding of market dynamics, okay? So I don't have enough capital. A lot of people say this, they fire into funding accounts trying to get hundreds of thousands of dollars to trade with, and they're not even profitable. They think that having money to trade with will make them profitable somehow. But I promise you, money is not your problem. You can't fund your way to success. You can lose $1 million just as fast as you can lose $1,000. Success comes from skill and disciplined execution. Now with prop firms, you're gonna learn a lot late into the program how to get through these prop firm evaluations. Capital will come when the skill is in place. These are essentially companies that will give you between $100,000 to sometimes upwards of $1 million to trade with. You get to keep 80% of the profits when you have the skill set to get through evaluation. So I reframe this one, I don't have enough capital, as I'm not willing to take accountability. Because if we think about what it truly is, it is just us pushing the blame onto something else, an external factor. I don't have enough money, so I can't win. So therefore you can blame everything on this because you know you're never going to get the money. So now you've got a permanent crutch to push the blame onto. But guess what? Having a permanent crutch, pushing the blame away, not taking accountability is not going to do anything except keep you broke. All right. So the last couple then, I mess up entries and exits. Yeah, you probably do. But you do it because you're naive to the importance and effectiveness of risk to reward and statistical edges, okay? It's not an entries and exits problem. It's a dramatic misunderstanding of the deeper layers that makes systems and makes traders win. So we reframe I mess up my entries and exits, because I promise that is not the reason why you lose, into I don't understand or respect edge, okay? And the final one, I struggle to control my emotions. Simply, you struggle with emotional control because you think wins are good and losses are bad. It's not particularly true. You can have a good loss and a bad win. It depends on the system and the way that the trade was formulated and executed. You think a trade that costs you money is a terrible one, when really it could be a statistically positive expectancy trade. And a trade that makes you money is a brilliant one, when realistically that one could be the worst gamble ever that just happened to pay out. So again, it's just ignorance to the value of systems and edge. It's nothing to do with you have an emotional problem, because when you trade under a system, you don't need emotions and you don't really need emotional control. You understand the rules are in place. You have statistics, you have data behind you that you validated and collected yourself. And now you don't have to worry about emotions. There's no room for emotions, okay? So when it comes to emotions and people talking about emotions in trading, it's more so a problem with the system as a whole. When you have the data-backed system in place, there's no room for emotions to throw you off. So we've reframed a bunch of basic surface level problems that you probably thought you had, dug a bit deeper to work out the deep root behind them. And now we have these reframed deep root problems. And they look pretty bad on the surface, because if you were to run through the list of issues that you had before, you'd now be saying this: I don't know how a strategy works. I don't know what makes traders win. I don't know what good trading looks like. I don't understand market dynamics. I'm not willing to take accountability. I don't understand or respect edge, and I can't differentiate good and bad trading. Obviously, this looks pretty bad, okay? If this is the way that you are approaching the market, you might be stressed out now because you think, oh, actually, I don't know anything. But it's okay, because we can fix those very easily. The first step to fixing the problem is diagnosing the problem. And now that we've done that, we are able to, very soon, once we finalize this first section of the video, how you actually turn this around and start operating like a professional so that you can eliminate all those problems fast, okay? So how do these problems form? Well, the general lack of understanding you have on important topics inside of trading come from bad education. So YouTube videos, courses, mentors, and educators. Obviously, you found me via YouTube most likely, or some online education, which is good news for you. But there is a big problem with a lot of the content that's out there. Now, you spent months or years consuming information from 1, people that can't trade, and 2, people that can trade but can't communicate the important elements over to you. Okay, so people that are good traders, bad educators, and then some people that are just bad traders, bad educators as well. So you watch a lot of videos, probably like some of these. Fake account flip videos, turning $100 into $1 million. And then it gets outed that it was all fake. That does not happen, right? If you could do that, you'd be a trillionaire. Falsified results everywhere. Stolen content without context. A lot of people online steal videos from smaller creators who are actually good traders, and then they post them on their million sub plus channel, okay? You'd be surprised. I think like 3 of the biggest creators, I'm not even gonna say who, absolutely cannot trade. I know who they are, and they cannot trade. And what they do is they just steal content from other people who can trade, some of the more boring channels like the one that I run, which is just straight education. And then they post it. And the problem with this is, because they stole the content, they don't have any context on the intricacies of that strategy they're teaching you. So you get taught a system, it looks really smart, it looks like a genius created it on the front end, but the person who taught it has no context because they stole it, right? So then you miss important elements. The system's never gonna work for you. Lifestyle content, you watch videos of people buying supercars and driving around in hypercars, buying watches, showing cash. It's so pointless, but it draws you in, it allures you. Shortcut strategies, super secret method to make $1,000 a day. Again, nonsense. And fragmented information, which is a problem on YouTube with just taking tidbits of information from here and there. If you were to take a piece of market structure education from me, and then you go and take supply and demand information from someone else, and you go and find another concept from someone else, the problem is we all trade them slightly differently. So the context is not going to come together. You've got 3 fragments of different maps, and they're not going to link, okay? So this is the problem, whether you're watching the good content and it's just fragmented, or it's good content that has been stolen by someone and reshared by someone with no context, or you're wasting your time watching lifestyle content and all that stuff. Essentially, this is where the problems stem from, okay? You feel like you're getting a good education, but a lot of it is just completely wrong or counterproductive, and that's what created the problems in your mind. So you've been taught wrong, which leaves you to
do probably one at least, or maybe many of these. Waste money trying to flip accounts. So you're trying to turn $100 into lots more because you've seen it happen, right? You're too eager to rush the process. So you're not actually going through the stages of a trading journey that you should go through. You're trading a mix of conflicting strategies from mentor 1, 2, 3, 4, 5. Your targets are stretched too far because you've been told you can achieve massive returns all the time. And your attention is stolen by lifestyle BS content, all right? To fix these problems and to set the foundation for success, you need to reprogram your mind to a way of thinking to fix these problems. You need the correct perception of trading. So we're covering everything required to break down your false perception and set you up for success in this class. We've now been through some of the core problems that you are likely facing in your trading. I'm sure one or maybe many of them resonated with you. We've gone into the deeper root cause behind those problems, and now we're going to start shifting that into helping you become an operator and thinking and acting like a pro, okay? So we're going to take you from chaos, losses, wasted time, stress, frustration, and confusion, and transform that into simplicity and clarity and trading that provides low time commitment, high performance, consistent results, and a calm mind, career, and life, all right? So here's your first action step. Super simple. Obviously, we haven't covered too much in the ways of how to fix the problems yet, but what you can do for now is this. You can stop watching any YouTube classes, even my own, okay? You're in the program now. Go through the program, buckle down with this. This is the clear-cut path, the tunnel vision run to success. Anything else, therefore, becomes a distraction. Eliminate any other mentors and educators. If you're in any groups, if you're in any of the courses, if you're in contact with anyone, cut it out, at least for the meantime, all right? You can go back to them if you hate me, but for now, if you follow this journey, you are going to succeed, all right? If you do everything I tell you to do, there is no reason why you can't win, like many others have won. So if you cut out any distraction, essentially, right? It's not that I hate all of the mentors and educators, but you need one streamlined approach. Unfollow all trading Instagram pages, right? If you're on Instagram watching memes and stuff and you follow some traders on there because you think that it's providing you value, promise it's not. Just unfollow them. Again, it's distraction. It pulls you away. Shiny objects, you know. And uninstall TikTok and any other worthless app. This is going to be good for your trading because it's less wasted time and more focus, and also just for your life because these things absolutely waste your time. All right, so the problem that you've been facing up to this point is rather than following this straight path from where you are now through to success, you've been distracted by 101 different things. You found a mentor, then you found another one. Then you saw this cool video of someone flipping accounts, and then you found an indicator, you joined a signals group, blah, 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 blah. There's just absolute chaos, and it draws you away from ever reaching success because all you're doing is jumping from hurdle to hurdle to hurdle to hurdle, and you're going in the wrong direction, okay? What you will do if you follow this advice I've given you, and you follow every other piece of advice that I'm going to give you, is you will change this path and you will tunnel vision run to your success, which of course is what we want for you, okay? A little bit of encouragement to make sure you actually do as I say and stick to this tunnel vision focus. This is what you can soon achieve, okay? This is a tiny bit of the results, but I just wanted to highlight some. You can pass funding evaluations, use that to generate profits, and then hopefully you'll be able to send me a message just like this one day, but only if you follow this roadmap. So lock in, all right? Little harsh reminder there, and also optimism for you so you can stay focused on the journey. All right, the next step is for us to set your expectations because misaligned expectations create many problems. They cause you to rush the process and push trading past the realm of possibility. The two big things we need to talk through are timeframes for success, how long it's going to take you to win, and your average achievable returns, mostly in percentage format here because you can make a lot of dollars, but you need to change the way you consider percentages and how you actually think about getting those dollars, okay? So the success time frame. Now realistically, and I believe you will succeed very quickly, it is possible to win very fast if you do the right things. If you follow everything I tell you to do, you can expect to be funded and reach your first payout anywhere from 4 to 6 months from today, dependent on your experience and how much work you put in, okay? If you don't put in max work, yes, it might take you longer. If you really lock in, do everything I tell you to do, and you do it optimally and you put the work and the time in, then yeah, you can win very quick. Maybe even less than 4 months from now, you could be getting your first payout. Now, the blueprint laid out in this program is clear cut and can be immediately applied once you've completed it, which will allow you to fast track success fast. But you need to respect every stage of the journey. And this is the core reason why traders lose for years before they finally work things out and transform their trading fast, which is what happens for the majority of people. Until now, you haven't had a journey. You've just been firing shots at the market, expecting something to one day magically work. Watching a video and adopting a tiny fragment of that as your strategy, spending all your time actively trading and taking bad setups instead of studying and testing, and risking too much pushing for short-term gains, the I want to make money today problem. And this short-term outlook can make profits today, but never over the long term, which is why you're stuck in that cycle, make money, lose money, make money, lose money, and could have been staying there for years. So you can win fast if you follow a proven roadmap. This is that roadmap. Focus completely on each step as I lay it out. Complete all of the resources, the worksheets, and the tasks I give you along the way. Follow the testing and validation process exactly as advised when we get there, and follow the transitioning to success roadmap perfectly that I'm going to give you at the end. The reason it's taken you so long to win up until now is because you've been applying randomness instead of a clear-cut path. Don't fall into old habits. So that's your success time frame. You can do it fast if you do it right. But now let's talk about achievable returns. So I believe, and this is one of the biggest issues with trading, that big profit target expectations kill the performance of traders. Traders are taught in YouTube videos from loads and loads of mentors, because loads of mentors don't know what they're doing, that they can consistently achieve 1% per day, 10% per week, 20% per month, figures like this. These are outrageous figures. These are too big. And if you're pushing for these percentage targets, you're going to cause yourself a lot of problems. So if you believe that every trader that is successful is consistently hitting 20% a month or 1% a day or 10% a week, it's going to make you overtrade to try and hit these targets, which therefore opens the floodgates to low quality positions and encourages you to gamble in order to meet your goals. Now, realistically, you don't need anything near that. And this may be a shock to a lot of traders, but you only need between 3 to 5% per month as a solid, consistent aim to make $3,000 to upwards of $20,000 per month without having to put loads of money down and without having high risk on your personal finances. So we'll run through the math real quick. 3 to 5% of $1,000 is only $30 to $50. So if you're trying to do this with probably around $1,000 account, maybe what you're trading now, obviously, it seems completely pointless because $50 a month, why even bother trading? But if we jump that up 100 times to a $100,000 account, which by the way, is very, very accessible, this is suddenly the same exact work, the same inputs, creates a $3,000 to $5,000 output. And if we 5x that to $500,000, which again is accessible without having to have that much money, by the way, you can make $15,000 to $25,000 for the exact same work that you would do to make $30 or $50 now, right? It's the same work, different outcomes. So it's not really about pushing for massive percentages. It's about building the skill set that allows you to acquire almost risk-free capital that you can then trade on with the same small performance, small, consistent, safe performance, and achieve massive dollar figures. So after we've mastered the strategy together, I'll be teaching you about proprietary trading firms. These are pretty much all of the results you see from my students before you joined, and obviously I showed you a few just. They are from proprietary trading firms. They're companies that will give you money to trade with if you can prove a skill set, okay? They will give you 6 to 7 figures in working capital for as little as realistically $400 to get started with them. So I'm going to show you how they work and how to pass the evaluations at the end of the program. But essentially, if you have the skill, you will get the capital. So for now, until we get to the end and we start talking about prop firms, I want you to focus entirely on skill set generation and forget about monetary returns. Stop active trading for a bit. Stop trying to make money today, just lock in on the skills, all right? Now, there are some caveats around profit targets, and I'll go through those now so you understand what you should be looking to expect. 3 to 5% is a baseline target, okay? Some months will be much larger. I'm not saying that you can only get 5% per month. I'm saying that if you consistently aim for around the 3 to 5% per month mark, you will do very well long term because this is going to translate into some big dollar figures. You can actually do 10%, 20%, 30% months on occasion, but you can't expect that to come through all of the time, okay? Some months will be negative as well, and you will lose money some months, so you won't be able to hit your 3 to 5% baseline target. But it's okay because losses happen, and as long as they're controlled, you will make it back very, very quickly, okay? You could probably expect 1 to 2 losing months per year, and they are going to be small 1 to 2% losses, as opposed to winning months are going to be exponentially larger and more consistent, okay? Targets are loose. You can't actually force the markets to provide trades that will get you to your profit targets. So we have the targets in place as a kind of guideline of what we want to work towards, but we can't force the markets to give us the money, right? If there's no setup, there's no setup. So we are going to be working towards a baseline, but If we can't get there, given market scenarios and market conditions, that's fine too. Now, 3 to 5% per month is averaged out, okay? So it could look like an 8% month, and then a 3% month, and then a 0% month, and then a 1% month, and then a 12% month. This is kind of how it works. But if we can look to create that 3 to 5% per month averaged out, we should be doing pretty good. And it is actually possible to hit 3 to 5% pretty easily, because you only need one good trade to do that. And then at that point, you can kind of just lock it in and then trade again next month, okay? So it's just a really nice kind of everyone friendly target to succeed at trading. And of course, the final thing to consider is that trading is unpredictable short term by nature, okay? So if you don't hit your 3 to 5% this week, don't worry. The markets are going to provide trades sporadically. Sometimes conditions are good, sometimes they're bad. And yes, you are going to go through short-term phases where you lose a few trades in a row, but if you continue to apply the system, you'll get yourself to that target. All right. You can actually trade less often with less urgency and less chaos and make more money. And you're going to make more by cutting back your ambitious percentage target. If you can hit that 3 to 5% per month averaged out, that is all you are going to need. And if you go into it expecting some unpredictability and some uneven outcomes, like a big month, then a small month, then a medium month, you're going to be in a very good headspace to deal with everything the market throws at you. All right. Okay. So just before we start talking about shifting into the mind of an operator, I want to talk to you about variance, which is in relation to this. We've talked about uneven outcomes and the possibility of markets providing essentially phases where you are going to lose, even if you keep doing the right thing. And this is variance, okay? So the reason market outcomes are unpredictable in the short term, even when you're trading a profitable, strong system, is due to what we call variance. So when you're operating a statistical edge, which is what we're going to be doing, we make money due to positive probabilities. We don't have certainty in the market regarding what's going to happen on a day-to-day basis, but we can create certainty over the long term by having a system that reacts well to whatever happens on the day-to-day basis, all right? Regardless of this though, markets can and will still act irrationally sometimes, which means in the short term, you can do everything right and you can still lose money. You can do everything wrong and you can still make money. But remember, the key word there is short term. This never works over the long term. If you keep doing the right thing, eventually you win. If you keep doing the wrong thing, eventually anything you've made will be taken away from you. So when you trade with no system or a broken system that doesn't have a strong edge, you may start off nicely, but eventually everything will come crashing down. If you trade with a good system and you have a well-backed statistical edge, which is what we're going to build together in this program, even if your trading goes on a downswing when you first start applying the system, and inevitably at some phases you will go through these downswings, okay? If you continue to apply though a good system that is backed by your data, you will eventually move to that exponential success, and this is what we're trying to take on. So I just want you to be aware of variance, because if you start to apply the system after you've tested it, or when you start testing it, and it doesn't go well for you, but you continue to push, okay, and continue to do everything that your testing and your studying has told you to do, then you will win, because the system you're going to learn is backed by positive expectancy. All right. So just don't worry about short-term losing phases. Everything is good as long as you lock in and stick to the plan. So to beat variance, you need to simply trade a strategy that's repeatable and has proven itself to work consistently. You're going to do that for yourself and work that all out for yourself into the program. This lets you weather losses because you know the winners will recoup lost money 100 times over if applied continuously and correctly. So variance is completely okay if you're doing everything right, but I thought it was worth mentioning what it is to you. All right, so now you understand all of the kind of problems and all of the little intricacies around variance and what it is that really makes traders succeed. What we need to do now is talk about how to actually transition your mindset and the way that you operate into that of a professional so that you can get the results of a professional. So here's what good trading looks like. It is process focused, it has structured routines, and calculated operation. We're going to start with process focused. And first, let's talk about process versus profit. So losing traders pretty much always have a profit focused mindset. They trade every day with the sole intention of just closing the day with a profit. So when you turn up, all you're thinking is, how can I make a bit of money on this next trade? This encourages you to force trades. It lowers the quality of your setups and it leads to death spirals, blown accounts, failed challenges, and all of that terrible stuff. Because if you start to lose trades and you lose money today, if your focus is only making money today, you get angry and then you start making mistakes and doing stupid stuff, which creates chaos, all right? So making money today while it seems like an obvious goal, because we're all here to make money, does more harm than good by creating room for damaging mistakes. What you actually want to develop is what winning traders have, which is a process-focused mindset. Professionals turn up every day and trade with the sole intention of just following their processes to the best of their abilities. Money is made as a result of perfect processes. So applying the process correctly is the focal action taken, and the profit that is created is simply a byproduct of good process following. So good trading is about building effective processes and then following them without deviation. We need processes for analysis, risk, execution, management, and administration. Everything is ordered, structured, and managed in a step-by-step manner. Now, if you spend every bit of time looking for new trades, you take trades that look different every time you trade, or you use different concepts on different days, you concern yourself all of the time with just finding a trade that's going to make you a few dollars. You risk different percentage amounts, or you stack risk on correlated assets. You use various different unrelated entry models, mix and match trade management techniques, and then skip or slack on administration tasks. Then it's expected that you're going to get losing outcomes. And I'm sure you're probably doing one or many of these things. See, trading is an input and output game. So if you are giving the market consistent, bad, chaotic, random inputs, you're going to get, of course, consistently random, chaotic outputs, i.e. bad results, big losses. But if you have good inputs and you consistently apply good inputs, i.e. processes, you will consistently get good outputs, okay? Process is the best way to achieve consistent good inputs, therefore leading to consistent good results. So the answer to this problem on becoming process focused is to find what works, we're doing that now, create processes around it, that's what we're going to be doing through the rest of the program, and then repeat endlessly. So by the time you've completed the core curriculum, your only job will simply be to endlessly repeat the winning system, all right? That fixes the majority of the chaos in your trading. So here's how you make this transition from chaotic to consistent trader. Instead of spending every bit of spare time looking for trades, section your trading into clear time blocks and set rules. We're going to talk about time blocks soon. Instead of taking trades that look different, learn one proven approach and then repeat that on every trade. They'll start to look very similar very quickly, and they will start to have very similar results. Instead of concerning yourself with finding winning trades, this really shouldn't be the focus, as weird as this sounds. Focus all of your attention on following the proven system, and that will create the winning trades as a byproduct. Instead of risking different percentage amounts and kind of randomly choosing how much you want to risk per trade, use a fixed risk and don't correlate your risk across multiple assets. Again, this is something that is coming up in the final part of this video when we talk about system. Instead of using various different unrelated entry models, just learn one or two working entry models and use only those. Simplification. Instead of mixing and matching trade management techniques, simply clearly define your one technique, again, tunnel vision focus, and don't deviate. And instead of skipping or slacking your administration tasks, just allot a small amount of time for journaling, testing, and refining. These are all things we're going to learn towards the end of the program. All of those stuff, that is how you make that transition from chaotic losing trader to consistent winning trader. And throughout this program, you will be learning all of the processes you need to follow and how to follow them. We'll build out each element together in a clear action plan as we go. And by the time you get to the end, your processes will be built out for every essential element of successful trading. For now, I just need you to understand that this is the mindset you need to be in, even if you don't understand the specifics. All right, we're gonna get to it. Don't worry. So the next thing to talk about is structured routines. This talks on some of the time blocks we've just discussed. So what you can see here are two routines. We have a bad trading routine and a good trading routine. And then we have our timeline of 12 a.m. to 12 a.m. So we got a 24-hour day. Now, a lot of traders, maybe you included, follow literally no routine. And from the moment you open your eyes to the moment you close them again in the evening, you are thinking about trading, you are actively trading, you are on the charts, you are what feels like putting in the work. But what you're actually doing is just feeding an addiction, feeding the chaos, all right? You waste all your time, you burned out, and when the day comes to a close, you've taken 5 different terrible trades, you're stressed out, you can't sleep well, you've got no life because you can't think about anything except charts, and your results are absolutely diabolical. It's a terrible way to trade, it's a terrible way to live. Good trading, as you can see, so this one here, rather than having a straight 24-hour stretch of insanity, we have these little green boxes which indicate small time blocks. So we have a window in the morning, we have a little check-in midday, we have another couple of check-ins in the afternoon. When we trade like this, we open up a lot of free time. And what we also do is get back our mental energy and mental clarity. See, as we said, you get paid based on the quality of your decisions, and you can only get paid well if your decisions are made well. If you're spending 24 hours a day thinking about trading, your decision capabilities are going to go down real bad because you're going to burn out, right? If you're taking small windows to trade in and you're only giving small amounts of attention, this is then hyper-focused attention. You actually enjoy it more as well. So with a good trading routine like this, you might end the day with one high-quality trade, low stress, relaxation, enjoyment, and strong results, all things that we want. Trading becomes more enjoyable and more profitable, and it's something you could actually maintain for the long term. So this is what your kind of structured routine would look like. You would do your morning analysis preparations. You will then do a midday check-in to see if there are any trades ready to execute or if there's anything you need to manage. You have another check-in in the afternoon, potentially if an alert or an order gets triggered. And then you have your administration window in the evening. And all of this can be done in around 60 minutes per day on the top end, sometimes even less. It means everything that's needed is covered. There is more time to enjoy life and relax. There's less risk of making irrational decisions. There's higher clarity, creating a better mental state. And it makes trading a joy. It's actually enjoyable. It's like a puzzle that you can come in and continue to work on every day instead of this insane, chaotic mess that takes over your entire life like a void, okay? So it makes trading a joy, not a burden. Now, when it comes to time blocking your trading, I'm not going to lock you into a set routine. And the reason for that is simply because everyone's life is different. I don't know whether you want to day trade or swing trade. Obviously, the dynamic trading that we do allows you flexibility to trade on any time frames, right? If you want to be a day trader, you'll learn how to, but you can do that in your you can choose your own time block. You could do that in a section in the morning and then do nothing else for the rest of the day. If you want to trade more like a swing trader or more dynamically in the way that I do, which is some day trades, some swing trades, then it's all rather loose. So my time blocks will look like this, my morning window, and then everything from there is just checking in and managing, okay? Based on alerts and orders, which again, we'll get to as we go. So I'm not going to lock you in a set routine. You can kind of do what you want. That's kind of the whole point of this, right? Building freedom. But essentially what you want to do is instead of giving your entire life to trading only to lose all of your money, you want to structure your trading around your life, okay? What do you want to do? What kind of time do you want to spend on trading? What style of trading do you want to do? And then build your time blocks around it. When you've done that, you can operate with a simple routine that cuts down time commitment to a minimum while still covering all bases. All the important work can be done in these small time blocks. Alerts and orders, get to them soon. Handle the day-to-day execution and management of positions without you having to stare at charts and melt your eyeballs for 20 hours a day. All right. So then the final thing, calculated operation. So your trading right now probably looks a bit like this. You come up with one trade idea, and that trade idea has to turn into a trade opportunity. So you take a subpar trade because you think that, for example, the dollar is going to go down. It loses. You take another one, it loses. You take another one, it loses. You take another one, it loses. Take another one, it wins. Happy days. But then you take another one and that loses. And by the end of the day, your one idea has stemmed into loads of trades which have ultimately lost you money because they're all low quality. Now, what we want to do is called calculated operation. We want to filter our trades through a process, and this is what you're going to learn throughout. I firmly believe that not every idea should become a trade opportunity, okay? What we do in the markets and what you need to start doing instead of the chaos you do now is you find an idea and you filter it through a process. The process is a rules-based system covered at the end of this class. This will eliminate any trades that don't fit the criteria of an A+ setup. Therefore, meaning you don't take low quality positions and you only end up taking the A+ trades, which means rather than this chaos where one little idea must turn into loads of trades, ultimately losing you money, every idea you have gets filtered through and only a small percentage of the trade ideas that you formulate at the start of a week or day turn into a winning trade. Okay, so every trade is filtered through a predefined process. Every trade is backed by full context and is high clarity. And many ideas become few high quality executions. That's the style of trading you're going to be learning. So we've been through a lot of the action points and the kind of thinking points that you need to use to shift the way you trade. For you to transform from a chaotic loser to a consistent winner, we need to shift your short-term profit focus, that focus on making money every day, into long-term process focus, okay? Processes will be laid out in the program and then simply follow them endlessly. Remove your rampant time wasting, your absolute trading addiction, and shift this into clearly defined time blocks. Trust me, it will be more enjoyable, more profitable, and you will start to love trading again. Turn your disordered chaos into simple calculated execution through filtering processes and step-by-step systems. And on that note, it's time for us to start talking about system, all right? So every winning trader has a system and every winning system has an edge. In this section, we need to talk about edge, win rates, risk versus reward, and rules-based systems. And listen up to all of this, because this is where we actually start to build out the first layer of our strategy, okay? We're not talking specifics on the strategy, but we're showing you now how a strategy makes money. This is vitally important. All right, so starting out, what is edge? Edge is your statistical advantage over the market. It balances your profit and loss by playing into the probabilities-based nature of the financial market. Ultimately, it is the only thing that can guarantee lasting success. So I'm going to show you an example of how edge works. And edge differs depending on the approach a trader takes. So edge is kind of how we build the math into the technical analysis we do and into the execution and management that we do that turns a chart work, a bit of analysis on a chart, into actual lasting success, all right? So here's an example of an edge. This is a probability edge. So a trader takes 2 trades, their average win is $1,000, their average loss is $1,000. If they continue to trade with these average wins and losses, long-term, their average win rate may be 65%. After 100 trades, they have 65 wins, which is a $65,000 positive return, and 35 losses, which is minus $35,000 in losing positions. So their total profit and loss after taking 100 trades is a balance of math, and it will be a $30,000 return. Providing they keep their win rate, average loss, and average win the same, they will continue to make this money over every 100 trade sample. Now, this is a risk to reward edge. So trader 2 is trading in a slightly different way. Their average win is $3,000, so it's considerably larger. Their average loss is still locked to $1,000. So they have a good disparity between the size of their win and the size of their loss. You can see this trader is losing quite a lot more trades. They're actually losing 6 out of 10 trades instead of winning 6.5. So the average win rate is 40%, meaning after 100 trades, they have 40 wins times $3,000 for a $120,000 return and 60 losses for $1,000 each for minus $60,000, which creates a total profit and loss outcome after 100 trades of $60,000. Now this is actually double what we just saw on the first example, even with a lower win rate. So those 2 edges I just showed you are probability edges, which is where you profit when you win more often than you lose, and risk reward edge, where you profit when your wins are bigger than your losses, okay? Probability edge is where you maintain win rates over 50% to be profitable. The higher your win rate goes, the more money that you make. So if every win is $1,000 and every loss is $1,000, if you win 50 trades and lose 50 trades, you are break even. But every percentage point your win rate goes above 50%, you're gonna make $1,000. Every percentage point your win rate goes below 50%, though, you become unprofitable and your strategy is going to make you lose. So taking a look at some examples here, you can see the 50% win rate trader is absolutely break even after 10 trades. 60% win rate trader is in profit by $2,000 after 10 trades. And the 70% win rate trader is in profit by $4,000 after 10 trades. The problem here with this system is, of course, if we dip under a 50% win rate, we are guaranteed to lose money, okay? So a 30% win rate and a 40% win rate, absolutely unprofitable with this approach. And that is a huge problem because markets are by nature unpredictable. There are macroeconomics, big headline news pieces, speculative moves and liquidity draws, too many factors that can turn perfect analysis into a loss. Even if you have the best trade markup in the world, it can go wrong, which means we can never really guarantee high win rates. Therefore, in my opinion, probability edge is fragile and it's suboptimal. It's not the way that I'd recommend you to trade. So what's the fix? Well, the fix that we're going to employ and that you see all the results from my students have been using is to build your trading around a risk to reward edge. This is where you profit when your wins are bigger than your losses, pretty much regardless of your win rates. So if each win is $3,000 and each loss is only $1,000, now if you win 50 trades and lose 50 trades, you make $100,000 compared to the probability edge trader making $0 at this win rate. If your win rate is above 25%, you are profitable. If your win rate is below 25%, this is a typo, my bad, then you are unprofitable. But providing you can win 2.5 out of 10 trades, you're good, you're in the green, okay? So if we take a look now, a 40% win rate, which was pretty deeply unprofitable on the previous example, is actually now very profitable, even more profitable than a 60 or 70% win rate with the probability edge approach. And when you start pushing that higher towards 60% win rates, which by the way, mine is around 64 long term, then you're in serious result territory. And even if things get really bad and you are losing 7 out of every 10 trades, well, you are still going to be profitable. It's only when you drop to losing 8 out of 10 trades that you actually move into the red. And even then you can see this is a tiny amount of damage considering 8 out of 10 trades lost in comparison to how damaging a a 20% win rate would be to a probabilities trader. All right. So with a risk reward edge, you are significantly lower win rate is required to win. Significantly less damage is caused by unprofitable win rates, and significantly less stress is endured during trading because you know you don't have to win many trades and your wins are big and they come and eat up the losses that you take. So it weathers the unpredictability of short-term market movements. Now you know the goal is to win more money on winning trades than you lose on losing trades. But how exactly do we do that? Well, we build the how into this system. How much we risk per trade, how we position our trades, and how we make this consistently applicable. So now we're going to talk through some system elements. Treat this as your introduction to trading strategies before we go deep into how we're actually going to do this. We need to talk about risk and technicals. We'll start out with risk. So the first thing is to focus on risk reward to maintain a long-term edge. Risk reward is mapped as a ratio. So when you hear me talking about 1 to 3, 1 to 5, what I'm talking about here is the ratio of profits we're looking to make on a trade. So a 1 to 3 R ratio. So this is 1 to 3 risk reward ratio means we are risking $1 to make $3 in returns. 1 to 5 is risking $1 to make $5 in returns. Okay. Right. So essentially the goal with risk reward is always to make more on our winning trades than we lose on our losing trades. Now, there is an inverse correlation between win rates and risk to reward ratios. So the higher your risk reward goes, the higher you have to extend your targets or the further away targets get. So higher risk reward creates lower win rates because there's more room for the market to have to move in order to close your trade for a profit. Lower risk reward means confined targets. Your stop losses can be a bit bigger, your targets can be smaller. So lower risk reward creates higher win rates because obviously it's easier for the market to hit a small target than a big one. So pushing your risk reward too high means you'll rarely secure a full win. So we don't want to start pushing for 1 to 20, 1 to 30, but targeting too low, of like 1 to 1s, 1 to 2, means your wins won't outsize your losses. And if they do, they will only ever so slightly outsize your losses, so you fall into that problem where you have to rely on probabilities again. So here's the perfect balance. This is the sweet spot risk reward ratio. So how this graph works, we have the risk reward ratio going from 1 down to 10. Okay, so this is risk $1 to make $1, risk $1 to make $4, risk $1 to make $10. And then across the bottom, we have your probability of success. So you can see as the risk reward ratio increases and gets bigger, your probability of closing that trade successfully for a full profit gets smaller, all right? Now, I've found the sweet spot in my trading is between around 3 and 6 R. So this is the target range that you should pretty much be looking for on the majority of your trades, meaning you should be risking $1 to make anywhere between $3 to $6 in returns. 6 is the high end. Between 3 and 4, very consistently achievable. 5 and 6, pretty commonly achievable as well, okay? Especially between 3 to 5, right? This is the sweet spot. So optimal risk reward sits between 3 to 6 R, and R is a risk multiple, by the way. So when I say 6 R, I mean 6 times your risk. So if we're risking $1, that's $6, okay? So your optimal risk reward sits between that 3 to 6 R area. Pushing it any further, you run into low win rates. Having it lower, you run into small wins. We don't like those. And here's some rules in line with this risk reward. Never take a trade that has less than 3R potential. So if your trade doesn't have the possibility of making you $3 for every $1 you risk, don't take the trade. Don't extend trades too far out of greed. So don't look for 20%, 40% individual trades. Sure, once in a blue moon, you can get really big positions, but if you do this consistently, your win rates will be so bad that you'll struggle to win. And just aim for that 5 to 6% mark per trade where possible, because that locks in pretty much a whole month of trading for you in one position. Okay, so that is the risk reward covered. But for a risk reward edge to work, every single trade you take needs to be sized in exactly the same manner. Now, if you size your trades based off of your level of confidence, you have random position sizing, which means if you've sized a trade big and it loses, now you've taken a big loss. If you then take a winning trade to counteract the losing trade, but you take that with a small position size, well, now you actually only win small. So you don't win back what you lost. What you should do instead is size every trade identically in percentage terms. Now you should just risk 1% per trade solidly across all your trades. Position sizing is always determined by us in percentage instead of lot sizes. If you don't know what they are, there is a subclass which shows you position sizing, lot sizing, and how to calculate risk per trade and position size on every trade just underneath this first core module, okay? We're gonna show you a calculator and really simplify the whole process there. But what we're looking to do is just solidly risk 1% of our account balance on every trade that we take. That's the sweet spot, all right? So the perfect risk per trade is 1%. The reason for that is it weathers downswings easily. If we go on a losing streak, we can't really dig too big of a hole because we're only losing 1% per trade, and it leaves open significant upside. If we were to be risking 0.2% or something, we really wouldn't make a lot of money at all, even if we were putting in the work. So 1% is the good sweet spot between limited downside, but significant open upside still remaining. All right. Now, as I've just said, trade size will be dynamic. So the actual amount of units you buy or sell per trade. Some will be 1 lot, others 3, others 0.75. Your stop loss size, your trade size or trade account size, and your risk per trade size will actually help you to decide how big trade should be. Again, we can use a calculator to simplify the process. If this page has just confused the hell out of you, do not worry, that subclass is gonna explain it for you. All right, on this topic, 1% risk per trade is solid. So now here's an example of system performance using the different elements that we've put together. If you trade with 1% risk, a 1-to-3 risk reward ratio, and a 50% win rate, here is a simulation of the potential results that you could look to achieve. So each one of these lines shows a different trader applying the system with these exact inputs. Now, obviously we can see variance creates different outputs, but the important thing that we want to see is even the worst case. So this red line highlights the worst case possibility over this sample of trades. Even this worst case possibility is up over 100% after this sample of trades. So even if you were to get the worst variance ever and apply this system very, very poorly, but still stick to these rules, you are guaranteed to be profitable. And of course, if you hit the higher end, if you really optimize your inputs, then of course, that's when the exponential results come through. But you can see, and the most important thing is, this is a profitable way to trade. Undoubtedly, there is no way to go negative if this is done correctly. So the final thing on the risk elements is risk limit. Risk per trade is not enough to cover downside on its own. You're going to need some limits and guidelines in place. The first is correlated asset risk considerations. Basically, the watch list that we'll be trading, you can kind of trade what you want with this system, but I do suggest you stick to major pairs, has correlations. So if you're going to trade any pair that has correlated currencies in, such as Euro USD, GBP USD, AUD USD, USD CAD, and USD JPY, all including the US dollar, well, if you take 3 trades at the same time across these pairs, you're actually correlating 3% risk on one position. Because if you were to buy Euro USD, buy GBP USD, and sell USD JPY, you are essentially betting across those 3 positions on the US dollar going down. If the US dollar goes up, you're going to lose 3 trades all in unison. Of course, not great. So we want to make sure we're not correlating risk across positions. And the most simplistic way to do this, from my trading experience, is the one good trade rule. Now, for my entire trading career, I've focused on executing and managing one good trade at a time. I don't stack correlated risk. I don't take 2 or more trades at once. I execute one trade, manage it to completion, and then find the next. This keeps your trading under control and also eliminates any possibility of getting crazy correlated risk. Okay. Now, the other rules are the risk per day, risk per week, and month limits. And we'll start with the risk per day rules. So risk per trade, risking 1% per trade, is still not going to save you if you take 5 losing trades in a day. Okay. 1% times 5 is still minus 5% in 24 hours, which, by the way, is very bad. So to limit downside, just hold this solid rule in your mind. You will only ever take 2 trades per day maximum. Now, most days are actually only going to provide 1 high quality setup at most across your watch list. So you shouldn't have to worry about this too much. But as a hard rule to stop you from impulsively taking too many trades and creating a situation like this, if you just lock yourself to only taking 1 trade, and then if it loses, but a re-entry comes around, 1 more trade, and that is it, that's the cutoff for the day, well then each day you are limited to at most 2% risk. Okay, it's a very simple, solid rule to put in place, gives you opportunity to make back a loss if a good setup does come around, but stops you from digging a significant hole. So it's really to stop impulsiveness, okay? Now, risk per week and month is less so focused on limiting impulsive trading and more of a safeguard from losses. So this kind of limit should be set to profit and loss. For example, if you lose 4% in a week, you will stop trading. If you lose 8% in a month, you will stop trading. Now, this just stops you from digging extreme holes that are hard to get out of. If you cut the trading before it gets too bad, you can then realign with your system, do the testing and the work required to rebuild your confidence and get yourself back on track, and then come back to the markets and apply everything correctly to get yourself out of the downswing before it gets real bad. So there's some good rules to put in place. We want to generally operate with a minimum 1 to 3 target targeting optimal 3 to 6 risk reward per trade. We want 1% fixed risk on every trade executed. We want to focus on at most 2 trades per day as a hard cutoff limit, and then have weekly and monthly cutoff points in place. There is additional risk guidance and all of this covered in more depth in some resources in the sub-classes. Okay, the final thing for us to cover before we move on to the next class is technical analysis. So I'm going to run you through the basics of how my system works and how I run my technical analysis. Obviously, the in-depth explanations are going to be over the next few classes. So I operate what I call a narrative-based trading strategy. I utilize high, medium, and low timeframes to formulate trade ideas that cross all timeframes. So there's full context, okay? It's highly contextual. All trades are derived from the story behind the market. So we use multiple timeframe analysis, pure price action, meaning no indicators, no lagging, additions to the charts, and a small refined watch list. Now this is all going to be broken down in depth over the next few classes, but what I do is I follow a rules-based trading strategy. This is to achieve consistency. And this is what you're going to be learning. It essentially means that every piece of analysis is the same. Every trade positioning looks the same. All the trades follow the same format, and everything runs in a if this, then that flow. So here's what the system looks like. From the top down, we go through high time frame biases, range identification, and points of interest. We then do that on the medium time frame, the lower time frames, and we can continually do this all the way down from the weekly to, if we wanted to, the 1 minute. That's what makes the trading dynamic. But as you can see, it is a continuous flow. It's the same thing over and over again, and that is what creates the results that we're looking for. So what is rules-based trading? Well, it's this kind of idea that we create an if this happens, then we do this scenario, okay, inside of our trading. Rather than trading discretionary, what we actually do is create a flow that we can follow over and over again. And the flow looks like this. We start out by analyzing the market. We check if there is a setup present. If we do not see a present, then we do not take a trade. If we do not see a setup, then we do not take a trade. If we do see a potential setup, we check our entry criteria. If our entry criteria are not met, then we do not take a trade. But if they are, then we check any other additional considerations. And this is all baked in. You're going to learn it all as we go. If these considerations are not met, again, we move over and we do not take a trade. But if the considerations are met, the entry criteria was met and the setup was present and everything fit in line inside of this filtering flow, then yes, we take a trade. And these end up being the A+ trades, the highest quality possible trades that you can find because you filtered out everything that is suboptimal. So when we trade rules-based, consistency is baked in because it's a repeatable flow. Guesswork is eliminated. There's no room for discretion. Clarity is high because all of our trades have been filtered. Stress is minimized and trading becomes as close to automated as it can be without using a trading robot to execute the trades for you. It's the most effective, repeatable, consistent, and enjoyable way to trade by far. So in order for us to achieve success, this is all we need to do. Follow this long-term success formula and bake this into our technicals. 1 to 3 risk reward, 1% risk per trade, and a win rate above 30%. We do this using a rules-based system that will make it happen consistently. Now, a quick note on win rates. I've gone into them quite a lot in this video, and I've said that they don't matter too much. But for those who want to know, my long-term win rate sits at around 64%, which is very high, actually. Now, you can get yours to this point with experience, and you will over time. But to begin with, as you start out with the system, your win rate will be a bit lower. You need to build experience, confidence, familiarity with the system to eliminate mistakes over time. So at the moment, if you can push anywhere 40% or around 40 to 50% win rates, just know you're doing very well. And your win rates will go up over time as you build familiarity with the system. So let's recap the foundations then. We've covered so far the problems in your trading, the fixes to those problems. We've reframed your expectations and understanding of what good trading looks like. I've showed you how to operate like a professional, how to craft an edge, and the different elements that we're going to use to create successful trading. We've essentially now laid the foundations of profitable trading for you. We framed your identity as a pro. To get the results of a pro, you need to take the actions of a pro. So we've given you action steps on how you can transition your mindset from where it is now to where it needs to be. And the core action steps you have now are: number 1, focus. Focus all your attention and effort on this program for the foreseeable future and eliminate all outside distraction. 2, operations. Start operating like a professional. Time blocks, structuring your day, calculated operations, all of the things we discussed in the middle part of this video. And 3, strategy. For now, spend your energy and time on building strategy through this program, not on actively trading. Pause trading until we get to the steps where I prompt you to resume and test again. Rather than trading and trying to make a bit of money, if you put all of your attention into the steps I give you in this program, you will make a lot more money a lot faster. Okay, so treat this as your building phase. This is where you build now to win later. Patience and focus will pay lifelong dividends, so just do as I say, and please don't fall off. What's next then? Well, through the next classes, we're going to build out the rules-based system together. I'm going to help you to master the actual approach that will create the systematic statistical edges that we've covered in this class. Then I'm going to show you how to transition into demo trading, live trading, funding with $100,000 or more, and actually getting paid consistently for your trading. And every step of this program follows the previous. It's calculated, so don't skip anything. You'll ruin the whole flow. When this is all done, the system is completed, you've mastered the strategy, we will let your edge play out and you'll see the results that it provides. So what I need you to do now is go to the subclasses. There are little resources, a video showing you about risk per trade and position sizing, and some worksheets in there that you can complete before you move on to day 2, okay? Don't rush it, take it easy. Make sure you're familiar with everything we've covered in here. Those resources will help you do that. And then I'll see you in day 2.